Purpose just filed for 15 brand new yield share ETFs. Yes, you heard that right. 15. Are they creating a golden opportunity for passive income investors or just flooding the market with too many choices? Hold on to your seatbelts, folks. This is going to be a good one. Not that long ago, Canadian income investors, well, they didn't have a lot to choose from. Back in 2020, if you wanted yield, your options were pretty limited. Things like Canute EIT, a handful of REITs, and some split core. Well, fast forward just 5 years, and the landscape has completely changed. Income investors are now spoiled for choice, with new ETFs popping up left and right. And the latest big move? Purpose is stepping into the spotlight with an incredible 15 new Canadian yield share ETFs. So, what exactly are these yield shares? In a nutshell, Purpose yield shares are ETFs built around a single company stock. They generate income by holding that stock and then selling covered call options on it. The option premiums, combined with any dividends that stock pays, are then packaged together and paid out to investors as a monthly income. In short, they turn one stock into a steady income stream, but with that trade-off of capped upside if the stock runs higher. Purpose already runs 16 yield share ETFs, and those focus on some of the biggest US names, companies like Tesla, Microsoft, and Nvidia. They've been popular because they give investors a way to tap into household name growth stocks while still pulling in some very nice monthly income. Now, Purpose is bringing that same formula, well, they're bringing it back home. These new 15 yield shares are all about Canada, targeting giants like Brookfield, Shopify, and Canadian National Railway. For investors, it means a chance to collect steady income while staying invested in some of the country's most influential companies. A sub to the channel is a purposeful way to enjoy future content. These new ETFs, they haven't officially launched yet, at least not at the time I'm recording this, but they're expected to hit the market soon. That doesn't mean we can't take a closer look. I'm going to walk you through what's on the table so far and share which of these ETFs I think stand out the most. Oh boy, we've got 15 to cover, so without any further ado, let's do this. We will begin with the Canadian financial sector. They sure do give you a lot of choice in this sector, with representation from the Big Six, as well as one of our life insurance giants. Banks in Canada are famously resilient, and using them as the backbone for covered call strategies means you can layer in extra income with a built-in level of relative safety. We're going to start with the Purpose BMO Yield Shares ETF. The ticker on that is going to be BMOY. Of course, the Bank of Montreal, they are the oldest bank in Canada. I'm not going to say a lot about these individual ones. I think the fact that our banking system in Canada overall is so resilient, I think that speaks volumes. We also have the Purpose TD Yield Shares ETF, and that one will have a ticker of TDY. I will add, this one has a lot more volatility thanks to a certain scandal, so that's not a bad thing for covered call ETFs for sure. We also have the Purpose RBC Yield Shares ETF. They've got a ticker of RBCY. We've got the Purpose Scotiabank Yield Shares ETF with a ticker of BNSY. We have the Purpose CIBC Yield Shares ETF, ticker on that one, CMY. That takes us to the Purpose National Bank Yield Shares ETF, ticker on that one, NAY. This is one that does really kind of interest me, that National Bank one, especially after their acquisition of Canadian Western Bank, making them a truly national bank. This one could be an interesting one to watch. And finally, we do have our one insurance company. We've got the Purpose Manulife Yield Shares ETF, MFCY. I am really liking this one as well. Manulife has always they've always had a good amount of volatility. That's one thing I'll give them. They have a lot of volatility. That volatility will work well with covered calls. In addition to that, out of all of the life insurance one, this is the only one that does have a little bit of access into the Chinese market. And I think that's going to help that stock, and I think it will also help this ETF as well. Let's move into energy and utilities. Two different sectors, but there can definitely be some overlap, and Purpose chose the perfect utility company for overlap. We got the Purpose Enbridge Yield Shares ETF, ticker of ENBY. Yes, they're technically a utility company and a major pipeline at the same time. So we get the consistent cash flow of utilities with some of the volatility of energy. Maybe it may just be a perfect combination for a covered call ETF for sure. We also have the Purpose Canadian Natural Resources Yield Shares ETF. The ticker on that will be CNQY. This one is our energy play, and that volatility will be working overtime for this one for sure. Another sector that has a pretty consistent cash flow is consumer staples, and Purpose has added a few from that sector as well. So we have the Purpose Dollarama Yield Shares ETF, ticker of DOLY. I think this is the first time I've ever seen Dollarama featured on a covered call ETF, so that's pretty cool. And same goes for the next one, and I love this one. The Purpose Couche-Tard Yield Shares ETF, ticker of ATDY. I love Couche-Tard a lot, and this one could be maybe one of my favorites for sure. We do have one from the technology sector, and that, of course, is, well, the Purpose Shopify Yield Shares ETF. SHPY is that ticker. And Shopify, well, they just became the largest Canadian company by market cap. So definitely another one that I think is very worthy of watching for sure. We also have one from the communication sector. We got the Purpose TELUS Yield Shares ETF, ticker of TY. Every time I see this, I'm going to want to say thank you. But anyway, TELUS is looking better. They are making some good moves, and that could be good for the stock. And any of that volatility around that sector could be very good for covered calls. Transportation. The transportation sector is also going to get one. This time, we got the Purpose Canadian National Railway Yield Shares ETF. I love it. I love it. And they have a ticker of CNRY. This is one that really excites me, and I am a big fan of CNR. So it'll be interesting to see how this one does. If we get some volatility, that certainly could be good for covered calls. Finally, we have one that really, really excites me, and it is a asset management company, which means we do get a form of diversification with this one, and I love diversification. So we have the Purpose Brookfield Yield Shares ETF. This one has a ticker of BNY. This one does hold Brookfield Corporation, so ticker BN, opposed to Brookfield Asset Management. I have been a big fan of Brookfield for for a long time, and I do think that this one will be a solid one. It'll definitely be one that I'll be interested in looking at for sure. Okay, so what do we know about these new ETFs? We do not have a lot of information at all, as they are still in the prospectus stage. However, we do know the treatment for the US ones, and that alone gives us an idea of what to expect. So let's start with those covered calls. They'll more than likely be writing covered calls on up to 50% of each individual holding, as they do with the US ones. I really, really cannot see them changing that aspect at all. In terms of leverage, these ETFs will more than likely use up to 25%, giving them a bit of extra firepower to, of course, enhance those returns. So in terms of what I just reported here on the covered call amount and the leverage, I would say we have I'd say we have higher than 95% certainty that that's how those are going to end up. Of course, Purpose could Purpose could do something strange, but I don't think they will. I think they're pretty predictable on these. One last tidbit of information we can assume is that the management fees on these ETFs should be coming in at 0.40%, basically the same as the US ones, and also matching those harvest ones too. Sure, the ETF forest is getting pretty dense now with Purpose adding 15 more yield share options, but is that really a bad thing? In my opinion, not at all. More choice means more work up front to pick your favorites, but it also means investors can tailor their income strategies more precisely. Variety isn't a bad thing. It's a good problem to have as long as you do your homework. If you are interested in the ETFs that we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on, well, those new harvest ETFs. Thank you for watching, and I will see you in the next video.